Qualified Charitable Distributions on this edition of WealthWise. Qualified Charitable Distributions. It's a term that many of us hear, but few of us understand. I'm Deanne Rosso, President and CEO of Elevate Wealth Advisory, and today we're speaking with our founder, Chuck Vickery, who's going to help us understand what QCDs are all about and how to integrate them into your giving. Thanks for joining us, Chuck.
Thanks, Deanne. We're talking about strategies for making charitable gifts, where you get good from doing good as you can touch, change, improve, impact, and provide for those institutions and organizations that you care about. So I want to talk a little bit about the Secure Act that was passed in December of 2019. It made two major changes, and one of those changes was that it delayed from age 70 and a half to age 72 when you were forced to begin withdrawing money from your retirement accounts. And basically this gives people about an extra 18 months for their money to accumulate before they have to take it out. Another change that the Secure Act did not do, and it sort of surprised us, was it left age 70 and a half as the age where you can do what's called a qualified charitable distribution from your IRA. So both you and your spouse can each make up to a $100,000 contribution to a qualified charity. And it comes from your IRA, and you do not include that charitable contribution as income. But those charitable contributions do count toward your RMD. So here's an example. This person wanted to give $10,000 to their church or their charity. So their IRA deposited $10,000 into their checking account. They turned around and wrote the charity a check for $10,000. So what happened? Number one, the charity got their $10,000. Number two, the $10,000 withdrawal counted toward their required minimum distribution. But number three, the $10,000 was counted as income for these people, and they had to pay taxes on that $10,000 of $2,400. Total cost of the $10,000, $12,400. Now, if we use a qualified charitable distribution, we simply ask our IRA to write the check directly to the institution receiving it, your church or your charity. What happens? The charity gets $10,000. The $10,000 satisfies your required minimum distribution. However, the $10,000 is excluded from your taxable income for that year, and your tax bill on this distribution is zero. Total cost of the charitable contribution, $10,000. This is a much, much smarter way to give than taking it directly from the IRA. With a QCD, you exclude taxes on the gift to the charity, and you still have the standard deduction. So you have what I call a both-and situation. You get to exclude from income both the gift and the standard deduction. And both of those reduce your modified adjusted gross income and your taxable income, which may lower your Medicaid taxes and the taxes on your Social Security.